Norbert Ore is chairman of the ISM Manufacturing Business Survey Committee of the Institute for Supply Management. He joins us now from Atlanta with more. Norbert, always good to see you. Welcome to Bloomberg News.
Thank you.
What's bringing new orders and the headline index back? Inventory rebuilding, or is it just a lot of export orders?
Well, I think it's a number of things. Obviously, the big changes in the index this month were in production, where we see continued growth, and this is the fifth month that we've seen growth in production. And then the employment index jumped up above 50, really unexpectedly, in my opinion. I think it's maybe possibly a little premature, but nonetheless, it helped get the index to 55.7, which is the highest we've been since April of '06.
More on that employment subindex. This is the one number, as you said, that really stood out, perhaps surprised you. Again, first rise there since October of 2007, according to Bloomberg data. So how much of that is temporary workers hired to meet immediate demand versus perhaps more permanent hirings? And will we see the results of that in next week's, or I'm sorry, the jobs report for October at the end of this week?
Yeah, I think it would be a little bit soon for the jobs report. It did surprise me, and I immediately started looking into the data to try to figure out what was going on. And there's two major categories. One of them was callbacks, whether it's calling back a shift, calling back individuals, or whatever. Apparently, some manufacturers, now that they've gotten through the destocking stage of the cycle, are interested in expanding their production modestly anyway. The other is temp employees, and that's just part of the cycle. Is we first rely on productivity, then we rely on temps, and before they turn into permanent jobs.
So do we see this as the end of that long decline in manufacturing payrolls then?
I think it's certainly the first sign. A lot of people expect our data to be kind of an early indicator and manufacturing to be an early indicator, and I would take it as an indicator more of that the rate of decline has probably dropped significantly, and in preparation for some minor growth in jobs a little bit later. I don't think it'll be this year, but maybe in the beginning of next year.
There's also a serious productivity story here. So I'm curious if you think that will continue. Does manufacturing productivity continue to rise, output increase, and then jobs disappear on that theme?
Well, it's some of both. You know, is the way the cycle works. Some of the jobs will never return. Others, depending on the industry and how capable the industry is of shutting in capacity, those jobs tend to come back.
Norbert, did the temporary government programs also play a role? Did they help to clear out inventories? I really can't use our data as a basis for making that kind of determination. My sense is that we're most strongly influenced by the business cycle, that we saw the rate of decline in inventories, we saw the employment correction, and now it's time to actually see some growth. But we need a driver. The consumer is still not as strong as obviously we'd like for them to be, and business investment, I think, is still going to struggle. Right, but what you did the data show that you saw some support from stabilized inventories?
Yes, indeed. With the inventories index coming in, I think, at 46.9, it's an indicator that inventories are pretty well balanced at this point. And if anything, our customer inventories index at 38.5 is indicating that there's some room on retailer shelves, in customer shelves, for additional product.
What do you remember saying about prices? They've been elevated for 3 months now. Is this a sign of inflation, perhaps just a material shortage?
Actually, there's a good story in that, because prices did flatten out just a little bit over the last couple of months at a rate around 65%. Supplier deliveries have been slowing, and generally prices and deliveries are tied very closely, and both of them have leveled out. So I think probably prices are going to be fairly quiet for the next couple of months. That we saw a number of markets hit bottom and a little bounce up on prices, and now they're going to stabilize.
Norbert, we have about 30 seconds left. Is manufacturing for the rest of the year well supported in your view?
I think it is. I think the cycle is in our favor, and I think the recovery is in our favor.
Our thanks to Norbert Ore of the Institute for Supply Management, reminding everybody that October manufacturing, according to the ISM survey, came in at a much better than expected level of 55.7.